Hello and welcome back to yet another video. I hope you're all doing well. In this video I'm going to be taking a look at some of the latest property market data that's been released by companies like Rightmove, Zoopla, Nationwide and some of the big banks. Because boy oh boy, there is a lot of confusion right now around what the hell is going on in the property market. But before we get into the meat of this video, don't forget to subscribe to the channel if you have not done so already. I am trying to reach that coveted 1,000 subscriber level and we've just tipped over 500 subscribers in the last few weeks, so thank you to every one of you who has liked, shared and subscribed to the channel. I really appreciate it. Now that you're all subscribed, let's get into it. First up, house prices. The market has been surprising analysts, with recent data from Nationwide showing that house prices rose by 0.7% in September 2024, pushing annual growth to 3.2%. This is the highest level it's been since 2022. Now, this upward trend has been largely driven by strong activity in the northwest, Scotland, where annual growth rates actually reached a whopping 4.9%. London, rather unsurprisingly, has seen much more modest growth, coming in at 2%. Now, regionally, there is a clear divide. Northern regions where, yes, although prices increased, and in some areas quite substantially, have remained relatively affordable post-pandemic, and are continuing to experience far stronger growth than those in the south. Even so, outer London and commuter areas like home counties have shown surprising resilience with a pretty steady demand for property. Next up, let's talk about buyer demand. As we all know, interest rates have proven to be a bit of a thorn in the side of property. Now that mortgage rates have begun to ease somewhat, the property market is actually beginning to see a bit of a boost, with buyers who may have been priced out in 2023 now coming back to the market. Average mortgage rates on a 2-year fix now sit at 4.8%, down from 6%, making homeownership much more attainable than it was before. Now, I want to emphasise that 4.8% still makes the majority of properties still far out of reach for most people in the UK. However, with these slightly more manageable rates, August saw mortgage approvals almost back to those pre-pandemic levels, sitting just 3% below 2017 to 2019 levels. Now, this has especially helped first-time buyers and those looking to remortgage. Basically, this is leading to increased buyer confidence and quicker home sales across the UK, particularly in cities like Manchester and Birmingham, where competition is fierce. For sellers, there has been a major shift in strategy. Many who held on to high asking prices in 2023 have now adjusted to align with the current market. This has luckily made homes much more attractive to potential buyers, helping to push sales timelines down pretty substantially. Now, let's move on to the rental market. The competition for rentals, as you can imagine, remains very competitive. Rightmove has recently reported that letting agents are handling around 17 inquiries per property, double the rate we saw in 2019. Now, despite seeing some moderation in rental growth rates, the UK is still seeing annual rental increases, especially in some of the more affordable regions like the northeast, where rent growth is actually sitting at around about 8.6%, far outpacing wage growth. In contrast, London rents have only grown by 2.1%. Now, this is likely due to the already ridiculously high prices of London property. The high demand and limited supply are making rentals less affordable and even harder for those renting to then save to one day buy a property of their own. Another big factor which is impacting the house prices and rental prices in the UK is housing supply. And I'm talking specifically new housing stock. Let's not forget, ladies and gentlemen, that property is largely a supply and demand game. Unfortunately, the bottom line here in the UK is that we just don't build enough houses. And if I'm being really honest, I don't see this changing anytime soon. Looking ahead, the market really is facing some uncertainty. The signals we're getting from the Bank of England suggest that we could be getting further rate cuts if inflation continues to stabilise around the 2% level. But external factors like the situation in the Middle East and oil prices could once again push inflation up, limiting these rate reductions. And let's not forget that we've now had the Labour budget. Now, what I think of that, I'm going to hold off on going into detail in this video because I'm going to make a future video on that one very soon, so hold tight for that. To sum up, the UK property market is showing some resilience, and it has done and it has done for a good few years now, despite all of the external turmoil that's been going on. With more modest price increases, a slight reduction in interest rates, and potentially an easing in rental growth, we do seem to be in a slightly more stable situation. So if you're someone who's looking to buy and you can afford the slightly higher interest rates, although they've come down, they are still high, and you've found yourself a good deal, I'm definitely someone who believes that time in the market is better than timing the market. With that said, that's all from me. I hope you found this video useful. If you did, please do give it a like and a share, and if you have not done so already, hit that subscribe button and let's get to 1,000 subs. Until next time.